If you're unsure about Bitcoin or the cryptocurrency industry in general, it's crucial to understand some fundamental facts about these virtual currencies because, despite their allure, not all of them may be as perfect as they seem. Throughout 2020 decade, Bitcoin has generated a lot of buzz, and its price has reached previously unheard of heights. What is Bitcoin's future, and what can we anticipate in the new future and beyond? Welcome to the channel. Subscribe and let's dive in. What is cryptocurrency? That is the big question. A cryptocurrency is a form of digital or virtual money that is protected by encryption and virtually impossible to duplicate or counterfeit. Blockchain technology, a distributed ledger enforced by a dispersed network of computers, is the foundation of many cryptocurrency decentralized networks. The fact that cryptocurrencies are often not issued by any central authority makes them potentially impervious to intervention from or manipulation by governments. Digital or virtual currency supported by cryptography technologies are known as cryptocurrencies. Without the aid of outside intermediaries, they make it possible to make safe online payments. The term crypto refers to the numerous cryptographic methods, such as hashing, public-private key pairings, and elliptical curve encryption that protect these entries. Blockchain, the operation and appeal of Bitcoin and other cryptocurrencies are fundamentally dependent on blockchain technology. A blockchain is essentially a collection of linked informational blocks on an online ledger, as its name suggests. The transactions in each block have all been independently validated by each validator on the network. It is nearly impossible to fabricate transaction histories since each node must first verify each newly created block before it can be confirmed. A network of distinct nodes, or computers that maintain the ledger, must concur on its contents before it can be published publicly. Blockchain technology, according to experts, can benefit numerous businesses, supplying networks, and procedures like online voting and crowdfunding. Cryptocurrency types. In order to make use of the blockchain that many cryptocurrencies are founded on, they were developed. For instance, Ethereum's Ether was created to be used as payment for blockchain validation work. Ether or ETH gained a new role as the blockchain staking mechanism in September 2022, when the blockchain switched to proof of stake. Banks can use Ripple's XRP to make transfers between multiple countries easier. Understanding the different types of cryptocurrencies is crucial because there are so many of them available. A cryptocurrency without a purpose is likely to be riskier than one with utility. So finding out if the coin you are looking at has a purpose will help you decide whether it's worth investing in. When you hear about different sorts of cryptocurrencies, you typically hear the coin's name. Coin kinds are distinct from coin names, though. With some of the names of tokens in the category, you might encounter the following types. Utility. Two instances of utility tokens are XRP and ETH in their separate blockchains. They carry out particular roles. Transactional. Tokens made to be applied as a means of exchange. The most well-known of these is Bitcoin. Governance. On a blockchain like Uniswap, these tokens stand in for voting or other privileges. Platform. These coins support blockchain-based applications like Solana. Security tokens. Tokens for security tokens that reflect ownership of an item, such as stock, and which have been tokenized or had their value moved to the blockchain. A securitized token is the EMS token, for instance. The Millennium Sapphire can be acquired in part if you can locate one of these for sale. If a cryptocurrency you come across doesn't fit into one of these categories, you've either discovered a brand new category or something that needs to be looked into to determine its legitimacy. Are investments in cryptocurrencies secure due to significant investor losses as a consequence of frauds, hacks, and vulnerabilities? Cryptocurrencies have developed a reputation as unstable investments. Although the underlying encryption is typically secure, New users may be seriously endangered by the technical difficulties of utilizing and holding crypto assets. Investors in cryptocurrencies should be aware of the following risks in addition to the market risks connected with speculative assets. User risk. A cryptocurrency transaction cannot be stopped or reversed after it has been sent, unlike traditional money. 1/5 of all bitcoins, according to some estimates, are currently inaccessible because of forgotten passwords or invalid sending addresses. Risks related to regulation. Many governments are attempting to regulate cryptocurrencies as either securities, currencies, or both, although the status of some of them is still uncertain. It might be challenging to sell cryptocurrencies or result in a market-wide price decline if there is an abrupt regulatory crackdown. Counterparty risks. To keep their Bitcoin, many investors and business owners use exchanges or other custodians. One could lose their entire investment if one of these third parties were to commit theft or suffer loss. Management risks. There are minimal safeguards against dishonest or unethical management practices as a result of the absence of comprehensive legislation. A lot of investors have lost a lot of money because management teams didn't provide what they promised. Programming risks. To regulate the transfer of customer deposits, several lending and investment platforms use automated smart contracts. By using one of these platforms, an investor accepts the possibility that a flaw or vulnerability in the programs could result in the loss of their investment. Market manipulation. Influential individuals, groups, and exchanges continue to operate unethically, making market manipulation a serious issue in the Bitcoin industry. Although the cryptocurrency industry may be young right now, many businesses accept Bitcoin globally, and blockchain has the ability to have an impact across numerous industries, with the potential for customer specifics to be stored in an authenticated distributed database that could be managed by the consumer and shared with any company or authority they wish. The decentralized nature of blockchain opens up the possibility of completely revolutionizing the identity industry in addition to global remittances. Any industry that makes use of loyalty programs or contracts may potentially be impacted. In addition to trust-based industries like tracing the provenance of valuable commodities, it is seen as a potential disruption in the insurance industry. The most valuable cryptocurrency by market capitalization, Bitcoin, is a volatile and dangerous investment. It should only be taken into consideration if you have a high level of risk tolerance, sound financial standing, and the ability to absorb any potential losses. To lower your overall risk exposure if you decide to invest, it's crucial to keep a diversified portfolio with a variety of investments. Don't put more than 10% of your portfolio into hazardous investments like Bitcoin. As a general guideline, the question of what kind of investment Bitcoin is still exists after more than 10 years. Bitcoin ownership is distinct from holding company shares. Bitcoin doesn't make money through the sale of goods or services way a corporation does. Dividends are not paid out by it. Also, it lacks a chief executive officer, a board of directors, or any other central organization that may set objectives and be held accountable. Securities and Exchange Commission Chair Jürgen Gensler stated on CNBC in June 2022 that some cryptocurrencies, notably Bitcoin, have the key qualities of a security, but others are a commodity. Raw elements like metal, grain, and milk are thought of as commodities. The Commodities Futures Trading Commission, the government body most involved in cryptocurrency regulation, oversees the commodity markets in addition to overseeing foreign exchange transactions. Others claim it is a form of money that can be used to buy goods and services. Although there are some establishments that accept Bitcoin, this is not a common practice. The benefit of purchasing Bitcoin in 2010 for a dime is obvious. Yet volatility also has significant drawbacks. A person who purchased Bitcoin in 2013 would have witnessed an 80% loss on their money. and it wouldn't rise above the water for another 3 years. A decrease that began in 2018 lasted for roughly a year, was followed by drops of at least 50% in 2021 and 2022. Anybody who invests in Bitcoin will want for success, but they should also be ready for significant declines. Although Bitcoin has frequently rebounded, there is a chance that it may reach zero. For instance, if a number of cryptocurrency sites collapse and there is a significant sell-off. The most popular cryptocurrency is Bitcoin, which is followed by others like Ethereum, Binance Coin, Solana, and Cardano. It is significantly less expensive to register your cryptocurrency right now. Therefore, those just getting started in the field should do it. Cryptography is used to secure digital assets known as cryptocurrencies. They are highly speculative because they are relatively new technology. Therefore, it's crucial to know the risks before investing. Thank you for watching. Follow for more.